Hey traders, Jason here from Levitt Brothers. So in this video, I'm going to talk through some day trades with index futures, the NQ and the ES. I'm going to show you a very simple setup that works in all time frames and works for futures and works for stocks. Whether you're a day trader, whether you're swing trading and hold for a couple weeks, whether you're even just longer term trading and just want to hold for months, this setup works on all time frames for pretty much all products out there. Okay, that's all it takes to become good, to become independently, financially independent. You just need a simple setup that works, that clicks with your personality, something that you could practice, get good at, build your skills, and just do it over and over and over. You don't have to be quote unquote a jack of all trades. You only have to be good at one thing. Okay, maybe this is it. Okay, I teach this, and I teach a lot of other setups in my masterclass. So, one setup could completely change your life. So invest in your education. Check out my masterclass. All right, let's get into this now. So these are going to be day trades with the NQ and the ES. I use time frames, 2 minutes, 4 minutes, 5 minutes. Simple setups. Let's go through them. I'm not going to do these in any particular order, just because. All right, so what we got here is we got price chart up above. We got MACD in the middle here with the histogram, and then we got stochastic down below. Let's go through this. So I got a positive divergence here between the price and the MACD histogram. You got MACD crosses up right there. Okay. And so when it crosses up, all right, so then the price moves up while the MACD stays in an uptrending mode, crossed up. We get dips. And these dips are buyable as long as the MACD stays crossing up, and then we get time. We use the stochastic as a timing mechanism. So while the MACD is crossed up, we get a dip within the newly forming uptrend. So we get a kiss here and a cross here, and that moves the index up further. Then there's another dip, and we get a kiss here and a cross here, and then it happens again. We get a kiss here and across there. Okay, so as long as the MACD stays in this uptrending position, we use the stochastic as a timing mechanism to get in. Now going towards the right side of the chart here, we have, actually let me delete those. We have higher highs here, we got lower highs here, so that is negative divergence. Then we get the MACD crosses down, okay, and this thing moves down. So that's possibly the start of a downtrend. Then while the MACD is moving in that direction, we get another counter move, an attempt to rally, but it fails because the MACD kisses there and crosses there, and then it continues down, as you can see. Okay. Let's go to the next example. Again, these are in no particular order. You won't be able to tell what the date is. I didn't do that on purpose. You just won't be able to tell. It doesn't really matter. All right, so looking at the left side here, we get a cross here. I prefer a divergence, but we don't always get it. So we get a cross here. The NQ moves up. Then during this period of time, when the NQ kind of drifts sideways and down, we get a kiss from the MACD and a cross from the stochastic, and then we get a continuation of the move up. Now you get up towards the top here, and you get a negative divergence. That's going down. That's terrible. Let me redraw those. You get that's going down. You get that's going up. So then the MACD crosses there. And then as this thing, at some point in time, so that to me spells the potential end of the uptrend. Now, I don't manage trades with the indicators. I manage trades with the price chart. So since the price respected the 8 moving average here and respected the 8 moving average here and respected the 8 moving average here, even if this crosses down, I'm going to stay in as long as the 8 continues to hold. So if you're doing shorter term trades, I'd be out here. If you're trying to nail a bigger move, then my next line of defense is the orange line, which is the 21 EMA, and it just happened to hold there. So really good setup here. got a crossover on the left side, probably half hour or so after the opening bell, drift back, kiss, cross, and a continuation of the move up. All right, next example. So here we have the NQ 5-minute chart, lower low here, higher low there, cross up there. Then during this sideways drift here, the MACD comes back down a little bit. We get a kiss there, cross here. It's not ideal. I'd prefer a little bit of a bigger hump here and a little bit, more obvious, where the MACD comes down, kisses, and then bounces off. Don't always get it. Also with the stochastic, I prefer a deeper move down. Ideally we get a move down all the way to the oversold level. That doesn't happen again, or it doesn't happen all the time. So anyways, we got a signal here. We can go long. This one didn't work out. Okay, it moved up. It churned, and eventually just came down. So this one ends up getting stopped out for probably a small gain. It's the way it goes. It doesn't work all the time. The key to trading isn't, we're not going to find a system that works all the time. If we can find one that works half the time, that's great. Keep your losses small on one side, and then with your winners, let them run. And if you're, once you get some seat time and some practice, you can push them a little bit and increase your position size. So that's from an operation standpoint, that's how you want to approach it. You're never going to find a strategy that's going to work all the time. You just want one that works more often than it doesn't, something that's comfortable with you, something that works, something that kind of clicks with your personality. And after that, keep losses small and push winners, and you could do all right. All right, let's move on to the next one. All right, here's the NQ 4-minute chart. So not stock, but the NQ pushing up, higher high here, lower high here. We got a cross. So that's a really good trade right down here that fell, quite a few points. It was a good one. So looking for a potential kiss over here somewhere and a cross over here to signal a continuation move down. That did not happen. Okay. Instead, what we got is what I call an ABC pattern with the MACD, where you get an A move, a B move, and then a C move. So it's a trend, it's a counter move, and then it's a continuation of the trend, which is what happened here. So this was a really nice short, and if we're looking to short a bounce, it didn't materialize because we crossed back up and kept going, as you can see. Looking to the right side of the chart here, we have a cross down here, and then the MACD stayed trending lower. Okay, and what I do is, like I've said a few minutes ago, is that when we're trending in one direction, we use the stochastic as a timing mechanism. So this would be a short, and you can see not only did that curl down, at the same time we got the kiss here, but we also broke a trend line. Okay, I do draw trend lines on my stochastic chart. I do teach this in my master class. So that would be a short, and that would be a short, which coincides with here and here. Now, in each case, they didn't go very far. That's just the way it goes. Again, nothing's foolproof. We're not going to have a strategy that works all the time. But if you have a strategy, it gives you a frame of reference in how to gauge the market. Okay, so this is not bad. We had a good short over here. We had a rebound here, and we had a couple short attempts, which ended up being just small profits. And at some point in time, you just say, hey, the market's trending up. I'm going to let it go. Let's go to the next one. All right, so here is the ES 4-minute chart. So we're going to look at, first we're going to look at, and we're going to look at the bottom here. So we get a cross up over here. Okay, ES moves off the low. We settle in here underneath the 21 EMA. Okay, getting batted back there, so it has potential to move up, but as long as that EMA is in place, you got to be really skeptical. So we got it during this time where it drifted lower. We got a kiss here and a cross here, and then a continuation move up. As I've said, I prefer a more distinct, hump here, and I also prefer a deeper drop from the stochastic. We didn't get it. Still got a nice move. Then fast forward a little bit further in time, you get another kiss here and another cross and a cross here, which leads to this move there. Okay, so not bad at all. All right, last one. This is today's chart, 2-minute chart. As I was grabbing these examples and just organizing myself to do this video, these trades were setting up. 2-minute chart, NQ, higher high, lower high, cross there. During this counter move in the newly formed downtrend, which got rejected by the 21 there, we got a kiss here and a cross here, and then a continuation down. Then at the lows here, well, not at the lows, but as the lows were forming, we got a positive divergence here and there. We got a cross there. Okay, so MACD is crossing up, moves up, counter move. During the counter move, we got a kiss here, cross here, and then a continuation to move up. So we got on the 2-minute chart, we got a nice short in the morning, and then literally like 20 minutes ago, 30 minutes ago before I record this, late morning, we got a nice long. All right, so as I said at the top, to be successful, you only need one simple setup that works, that clicks with your personality. Practice it, get good at it. And when you get pretty good at it, then you could start taking on more size and really push things a little bit harder. You need a setup, you need some guidance, you need some training. Check out my masterclass. It'll give you everything you need to know to be successful in the market. After that, it's still going to take some work, but at least you have perspective. At least you have a frame of reference. At least you have some place to start and you're not confused and just not sure what to do. All right, good luck. See you next time.